Dalio claims World War III has already begun. He's describing a silent, aggressive conflict of global capital, where the battlefield is the international financial system. Right now, men who make their fortunes when others lose theirs, Warren Buffett, Bill Gates, and Mark Zuckerberg, are liquidating massive portions of their most profitable passive assets. They are converting these holdings into cash at the same time. This graph maps Dalio's analysis of global empires over 500 years. Their fates follow a life cycle: birth, growth, maturity, aging, and decline. The data indicates the world order established after World War II has reached its final phase. We are watching a rewrite of the rules. The financial systems that have governed global wealth for nearly a century are being dissolved and replaced. Historically, the United States built its dominance on three pillars. First, importing the world's top tech talent. Second, an isolated geographic shield that allows massive military strength to strike anywhere without consequence. And third, financial supremacy through the exclusive use of the US dollar. But those pillars are fracturing. Relying on imported talent has left 60% of domestic adults reading below a 6th grade level, creating a K-shaped economy. While tech elites thrive, ordinary workers lose their purchasing power. Simultaneously, maintaining 800 overseas military bases burns through cash at an unsustainable rate. The United States currently owes nearly $40 trillion. It hasn't paid back a single penny of the principal. The annual interest payments now cost more than the entire U.S. military budget, consuming nearly half of every $100 the government collects. If the government prints money to cover that deficit, it triggers hyperinflation. If it fails to pay, the global financial system collapses. To survive, the U.S. needs a mechanism to move this debt off the national balance sheet. In the 18th century, Britain faced this exact debt spiral. After a massive conflict with Spain, the government was drowning in obligations. To attract buyers for its bonds, Britain offered high interest rates, which only accelerated its path toward national bankruptcy. Britain survived via a debt-to-equity swap, transferring sovereign debt into the newly created South Sea Company. Investors converted bonds into stock. Promised endless gold, people borrowed heavily, spiking prices. But realizing there was no gold, panic selling crashed the stock to zero. Retail investors were wiped out, but the British government didn't have to repay those original bonds. They used the collapse of the private company to erase their massive debt slate. By using a private market to absorb its financial liabilities, Britain secured another 100 years of global dominance. Surviving these engineered wealth transfers requires tracking capital flows before the public gets caught in the swamp. Click the link in the description to join the Stewardship Finance Academy's free stock investment masterclass. You will learn the risk management protocols the professionals use to protect their portfolios. Relying on hard institutional data is the only way to protect your savings and build wealth during a global regime change. The United States is currently following this same historical playbook. To absorb $40 trillion in debt without destroying the dollar, the government is looking to the only sector with enough scale and growth to act as a modern South Sea Company: artificial intelligence. This bar chart shows the growth of AI compute tokens, the digital currency required to run AI models. In 2024, consumption was 100 billion tokens daily. By 2026, that figure reached 180 trillion, an 1,800-fold increase in just 24 months. Tech giants are already integrating this value into the labor market. Jensen Huang has begun paying some engineers partly in compute tokens rather than US dollars, effectively creating a new digital standard for compensation. As global commerce becomes dependent on AI for logistics and healthcare, the power to mint currency is migrating from the Federal Reserve to Silicon Valley server farms. To facilitate this modern debt swap, the strategy involves allowing tech monopolies to issue their own massive stablecoins. Instead of being pegged to the dollar, these would be backed by raw AI computing power. This creates a closed loop. For every $1 billion of new tokens issued, tech monopolies must purchase equivalent US Treasury bonds. Global businesses desperate for AI compute will buy these tokens. Their operations unknowingly fund the US debt, creating a permanent private bond buyer. This is why the ultra-wealthy are currently shifting their wealth into hard assets like gold. They are preparing for the final transition away from the old fiat system. The old rules of dollar supremacy are dissolving. Click the link to join the Stewardship Finance Academy and learn how to position your portfolio for the new rules of global wealth.